So you've ever felt like you're just on the outside looking in on this whole crypto thing? Trust me, you are not alone. What we're going to do today is build a really simple, clear operating system to help you navigate this, well, this exciting, but let's be honest, pretty confusing world. Now, this isn't financial advice, okay? Think of it more as a guide to help you make smarter, safer decisions. Let's dive in.
You know the feeling. You're scrolling through social media and it's just impossible to miss. All the hype, all the jargon you don't understand, and of course, those wild stories of people making unbelievable amounts of money. It is so easy to feel like you're missing the boat, like there's some big secret that everyone else is in on.
And you know what? That cautious feeling you have, it's 100% justified. For every crazy success story you hear, there are so many more people who get absolutely burned by all the hype. Without a really clear plan, the crypto world really can feel like you're walking through a minefield. And that's exactly why we're here. We are going to build a simple, repeatable framework, a system that will not only help you survive all the crazy ups and downs, but will actually empower you to learn and make really smart long-term decisions.
Okay, so before we even get into talking about what to buy, we have to start with the single most important thing, your mindset. This right here, this is the foundation that's going to protect you from the wild, emotional roller coaster of the crypto market.
So here's the key mental shift. Forget about getting rich overnight. I'm serious. That is not a strategy. That's buying a lottery ticket. For a beginner, the real goal is just to survive, to learn, and to let your knowledge and your capital grow slowly and safely over time. In crypto, just staying in the game is the first and most important step to win.
All right, with that mindset locked in, the next step is to figure out who you are in this world. Are you an investor or are you a trader? Believe me, the answer to this question is going to shape every single decision you make from here on out.
And you can see the breakdown right here. Investing, that's for people with a long-term vision, right? You're patient, maybe you have a busy life. Trading, on the other hand, is basically a full-time job. It demands serious discipline, a lot of time, and a really deep understanding of how markets work. You have to be honest with yourself. Which one of those sounds like you?
And I love this quote because it just says it's all. If you can't explain your strategy simply, in just a couple of sentences, then you're not a trader, you're just guessing. For almost every beginner out there, a long-term investing approach is the way to go. It's way less stressful, and it gives you the breathing room to learn without risking your entire stack.
So, you've picked your path. You're an investor. Now for the exciting part. How do you actually start buying stuff? Let's break down the two main ways to get in the game.
You've basically got two main options. You can go all in at once with a lump sum, or you can spread out your buys over time using what's called dollar cost averaging, or DCA for short. Now, in a market as unpredictable as crypto, throwing in a lump sum is a huge bet on timing it right. DCA, on the other hand, helps you manage that risk by smoothing out your average entry price.
You know, at its heart, DCA is really more about psychology than it is about complex math. It's a system, and that system helps you stay disciplined and keeps your emotions from taking over. By just buying consistently, you avoid the panic selling and the FOMO buying that lead to so many bad decisions. It's about behavioral control.
And the best part is, it's actually incredibly simple to do. All you have to do is pick an amount you can truly afford, set a regular schedule, like every Friday or the first of every month, and then just stick to it. The real key here is consistency and, of course, keeping track of your total investment over time.
Okay, now for the question I know you've all been waiting for. What should you actually buy? But here's a little secret for you. For beginners, how you build your portfolio is often way more important than the specific what you put in it.
So think about it like this. This three-tiered approach is a fantastic way to manage your risk. The big slice of your portfolio, the core assets, that gives you stability. Then you have smaller slices for growth and speculation, which give you exposure to assets with higher potential returns, but without betting the entire farm. It's all about finding that right balance.
So your core is your bedrock, right? It's made up of the most established players, like Bitcoin and Ethereum. Growth is where you put projects that have real potential but are definitely riskier. Think major Layer 1 blockchains or Layer 2 scaling solutions. And speculation? Well, that's for the moonshots, the really high-risk, high-reward bets that could pay off big or could easily go to zero.
And now for the golden rule. Seriously, if you remember nothing else, remember this. Never, ever invest more than you can truly afford to lose. The crypto market can be absolutely brutal. I'm talking 50, 80% drops. If the thought of losing that much money keeps you up at night, you've invested too much. Start small.
All right, you've got your foundation, you've got your strategy. Now it's time to talk about the traps. These are the really common mistakes that trip up almost every beginner, but the good news is they are all avoidable.
Oh man, we've all felt it. That fear of missing out. FOMO. A coin is just skyrocketing, everyone on Twitter is talking about it, and you feel that pull, that urge to jump in before it's too late. But here's the hard truth. FOMO is a portfolio killer. It almost always tricks you into buying high and eventually selling low.
Next up is overtrading. I mean, the market's open 24/7, right? It's so easy to get sucked into watching charts all day. But that path just leads to burnout, high fees, and really bad decisions. The solution? Set some rules for yourself. Create a simple checklist. Track your performance. If you're not doing those basic things, you're not trading. You're just gambling.
And now for the single fastest way to lose every single dollar you have in crypto. Leverage. For a beginner, the right amount of leverage to use is zero. Zilch. Nada. It's a tool that can magnify your gains, yeah, but it magnifies your losses just as easily, and often much faster. In a market this volatile, leverage is just a recipe for total disaster. Do yourself a favor and just stay away.
Whew! We have covered a lot of ground, haven't we? Mindset, strategy, portfolio, pitfalls. Now, let's bring it all together into one simple, powerful tool that is going to be your North Star on this whole journey.
This right here, this is your one-page plan, your personal crypto constitution. You fill this out before you invest a single dollar. The act of writing down your goals, your rules, and your limits forces you to think rationally, and this document will be your anchor when the market gets crazy. It is your shield against making emotional decisions.
Look, in the world of crypto, just hoping for the best is not a strategy. It's a gamble. A plan, on the other hand, is what turns you from a gambler into an investor. So before you do anything else, you have to ask yourself, what's your plan?